Welcome to Ticker.com news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. Economic news of the week confirmed two dominant themes of the last few months: slowing economic activities worldwide and elevated inflation. So let's start with the U.S. The U.S. goods and services trade deficit widened to $65 billion in July from a downwardly revised $64 billion in June. For the past 12 months, the deficit has stayed above $60 billion every month. The July increase in goods and services deficit reflected a rise in the goods deficit of $2 billion to $90 billion and an increase in the services surplus of $0.7 billion to $25 billion. Factory orders declined in July after rising in the previous 4 months in a row on the weakness in capital goods orders. Moreover, the U.S. weekly initial jobless claims dropped to near 6-month low, indicating resilient labor market, setting of worries that the labor market conditions are not likely to ease anytime soon and the Fed may have to act. Another report from the government showed that the productivity is rising at a slower pace. Unit labor cost in the non-farm business sector rose 2.2% from a year ago in the second quarter, higher than 1.6% in the preliminary estimate, but still lower than a 3.3% gain in the first quarter. Turning our attention to Europe, the euro area GDP growth in the second quarter was revised lower to 0.1% from the previous quarter, indicating that economic activities are stalling. The euro area retail sales declined for the 10th month in a row and fell 1% in July despite a rise in energy and food prices. Producer prices in the euro area accelerated to a decline of 7.6% from a year ago in July from the 3.4% decrease. Also, higher mortgage rates drove home prices lower in the UK, but home prices are still sharply higher than the 3 years ago. UK home prices decline accelerated and dropped for the 4th month in a row in August. In other economic news in the region, German inflation was confirmed to ease to 6.1% in August from 6.2% in July, and French industrial output rebounded 0.8% on a monthly basis in July after declining 0.9% in June. Spain's industrial production declined 1.8% from a year ago, following the upwardly revised 3.2% fall in the previous month. In summary, economy in the euro area is struggling amid stubborn inflation. Consumers are focused on meeting basic needs, and businesses are facing headwinds because of weakening global demand. We now turn our attention to Asia. Japan's second quarter economic growth was revised lower to 4.8% from the previous estimate of 6% on an annual basis, and to 1.2% from 1.5% on a quarterly basis. China's export declined for the 4th month in a row by 8.8% in August, and imports fell 7.3%, and trade plus surplus eased to $68 billion from $80.6 billion in July after exports declined to $285 billion and imports decreased to $216 billion. Let's review financial markets highlights. So if global economic growth is slowing, why financial markets are still elevated? Well, investors are hoping that the US and Europe will avoid a recession and China's economic growth will rebound. Moreover, investors are hoping that the US recession will be shallow and brief and that will help Europe avoid a sharper downturn. Investors are also counting on weakening of energy prices, especially in Europe, that will revive consumer spending in the region. In other words, financial markets are looking beyond the expected economic slowdown over the next several quarters. But then the US was expected to face a recession in 2022 and then again in 2023, and now that has been pushed to 2024. In other words, economy has been too resilient. The US economy has been too resilient, and the much forecasted recession has not arrived so far. The dollar index, which tracks the prices of price of the US dollar against the major currencies, increased for the 5th day in a row and extended weekly gains to the 8th week in a row and rose to a 6-month high on the expectations of higher interest rates. But for now, currencies, commodities, and stocks are forecasting different scenarios. The offshore Chinese yuan traded at a record low against the US dollar since the start of trading in 2010 and dropped as low as 7.51 but recovered to 7.35, reflecting ongoing property market woes and slowing exports in China. For the week, crude oil price rose 2% after Russia and Saudi Arabia extended voluntary production cuts till the year's end to bolster oil price near the target level of $90 a barrel. Natural gas price soared 10% in Europe after unions decided to strike at 4 LNG facilities in Australia, disrupting global supply of natural gas as early as next month. The yen traded above 147 against the US dollar for the second day in a row earlier this week after the short-term US Treasury yields advanced following the worries of a rebound in inflation, indicating that speculators may force the hand of the Bank of Japan to change its yield curve management policy. Stock markets in China, Japan, Europe, and the US fell, and India was the lone gainer. Markets declined after the U.S. weekly jobless claim dropped to multi-month low and indicating labor market is still too strong. So this week, global markets trimmed 2023 gains as fears of high rates gripped markets after multi-month low jobless claims provided another strong signal that job market is still too strong following the two good reports released last week. Investors are worried that the Fed may have to cool the economy because the economy may be too strong for the inflation to come down to the 2% level preferred by the policymakers. Let's review the stocks in the news this week, and we start stocks that moved up. Kroger Company reported mixed quarterly results and estimated nationwide settlement of $1.2 billion related to opioid claims. DocuSign reported stronger than expected quarterly results on sustained revenue growth. WestRock is said to be nearing a merger with the UK-based Smurfit Kappa and create a $20 billion paper and packaging company. Airbnb and Blackstone will replace Newell Brand and Deere & Company in the S&P 500 index. Brady Corporation reported higher sales and adjusted quarterly earnings. SoftBank-controlled ARM said it plans to sell 9.4% stake in a public offering in the U.S. and raise between $4.5 billion and $4.9 billion. Deutsche Telekom said its subsidiary T-Mobile US announced a stock repurchase plan of up to $19 billion between the fourth quarter of 2023 and the end of 2024. AeroVironment jumped after the company reported a sharp improvement in its quarterly results. Roku lifted its third quarter revenue to a new range between $835 million and $875 million from the previous estimate of $815 million. GitLab estimated second quarter revenue growth is likely to sustain in the third quarter. Now let's review the stocks on the downside. RH, the furniture retailer, forecasted weak outlook on the weakness in luxury home market. Dutch Brothers, the coffee chain retailer, announced a stock offering of $300 million. ChargePoint plunged after the company reported rising losses and weaker revenue growth. Dave & Buster's said comparable same-store sales declined 6.3% in the second quarter. Warner Brothers Discovery said current strikes of actors and writers is likely to cost the company between $300 million and $500 million, and the company revised higher its full-year cash flow estimate. Asana, the work management company, declined despite the work management company reporting strong quarterly results and revising higher its full-year outlook. Southwest Airlines estimated August bookings were near the low end of the company's expectations and added third quarter revenue per seat mile is likely to be near the low end of its previous estimate. Looking ahead of the economic calendar, in the U.S., investors will be looking forward to CPI and the retail sales data, and the European Central Bank is expected to pause its key lending rate this week at 3.75%, after 9 rate hikes, and China is set to release industrial production, retail sales, and fixed investment data for August. That's all for today, and we will see you next week, and you can read daily market updates on ticker.com.